There's a couple top skills that you need when you're raising capital, and it requires patience and open-mindedness. If you're gonna manage a fund and you've decided I'm going to start investing on behalf of other people, you really need to hone in on your strategy and your messaging around that strategy. Determining the fund size and type of investment capital that you're looking for is gonna be really important when deciding what kind of fund you're gonna have. Today, we're gonna walk through my journey in the alternative space, where I got started in selling car washes at 15 to now managing millions of dollars as a private equity alternatives thought leader. There's a lot of things that happened between then and now. Raising $1 billion for other people, to raising my first fund and raising under 20 million in under a year. We can walk through all the nuances of what it means to be a fund manager or an investor, because sometimes it's okay to be one over the other. I'm Kellyanne Winit, and this is Alt Street. When I graduated high school and I went into college, I really couldn't validate being in school and paying for classes in business when I was in a room being taught by somebody who was reading a book they didn't write about a business they didn't own. And I wanted to go experience that out in the world because I had kind of had my own little small businesses I had started in high school. And then when I graduated, I had small businesses. So I went and worked for operators. I worked in the healthcare system. I worked for a radiology firm. I worked in construction for a demolition company. And so that experience actually at the demolition company is what catalyzed me into oil and gas. I took the experience that I was having as an operator in the construction space and took all of the reporting tools I was building into the oil and gas space. So even though I didn't go directly into oil and gas through my parents or my family connections, I found my own way there. It was going to happen inevitably anyways. And that was kind of my take into private equity, was in that oil and gas experience, 2012 to 2014, when oil prices went to $140 a barrel. So that was my intake into the world of private equity. Because I had a lot of different types of jobs, I worked with a lot of different types of personalities. So when you go from working with radiologists, which, I don't know how much experience you have being around doctors, but there are certain kind of personality, especially radiologists, that have to know a lot about everything. And then going from radiology into construction is a completely opposite type of personality. So just having exposure working with different types of people that have different types of experience or level of understanding of complex concepts really helps in the private equity space, the investment space, because when you're dealing with like retail investors, normal everyday millionaires that want exposure into things, you have to be able to like talk their talk and walk their walk. And you can't do that if you've never experienced something that they have. So I can go from conversation with somebody that owns an HVAC company to somebody that runs, a medical practice, because I've had that exposure to those types of personalities and level of understanding. So I can break down really complicated investment concepts to every level of investor. I'm 5 generations in oil and gas, and so what that means is that my family has had every type of role in the oil and gas industry, from engineers to roughnecks to investors. And being a 5th generation in that industry has allowed me to have some insights into it. So for me, I'm an investor. My parents have kind of always been into different kinds of businesses, not always oil and gas, and specifically on my mother's side. She was an accountant in the oil and gas business. She worked for several large family offices in the DFW area in oil and gas. And both my parents were kind of ahead of their time as far as it comes to investing and starting businesses. They were flipping apartment homes in the 80s. So a lot ahead of the time from people that are starting to flip apartments, multifamilies now. So I've always just been encouraged by them to be more of an entrepreneur. We never had hurdles raised by my parents. We were encouraged to take risk and try to fail, basically. I think I saw really good examples and really bad examples of people that manage money. And that's from even internal family offices and then people that uh, manage outside capital. And seeing the dynamic difference between people that have external responsibility for other people's money and people that are responsible for their own money and are a little bit riskier with it, without the thought of how it might affect other people, was definitely a defining moment for me of how I was going to run my own firm. There's a lot of self responsibility when you decide to take capital from someone else. Um, and I think that there was a huge disconnect there when I was um, in the family office space, because they just don't understand reality, and they cross a point where, okay, we've invested our own family's money for so long, now we want to partner with other families or take retail capital, and they just don't understand how that space works. So that was a really big driving moment for me to get into my own lane. I credit everything to my mother. My mother has been a very important person to me as far as support and knowledge and just kind of experience. She's seen a lot of things, and so I get to talk very openly and candidly about my strategy and like things that are going on in the world. And she pushes back, and I think that that's a good thing to have when you have someone close to you that gives you honest feedback. One of the most important pieces of advice, like I think I've received, I think everybody's kind of heard this, is that fail fast, right? You don't want to waste a lot of time on solutions that aren't working. This is very serious in the investment space because you don't want to keep dumping money into things that's not going to work. That's how you lose a significant amount of money. I had the fortunate experience of being able to fail without like landing on sharp rocks. It was always the opportunity to fail, but knowing that I had people around me that would, pick me up and like bop me on the bottom and send me on my way. And so being able to experience failure in a safe space is like really important. So make sure that you're surrounding yourself with people that allow you to do that, and help pick you up whenever you do experience failure, because it will happen. You will fail, and it's okay. I think my largest failure was like, again, holding on to an opportunity past its prime. So, again, throwing money or time or effort at something that isn't working, um, was my biggest lesson learned early in my career. About midway through my career, and even kind of now, I always have to remind myself that not all money is good money. So, just know that you don't have to accept every check that's offered to you, because as a fund manager, you have to remember that your clients, your investors are going to be with you for the next 5, 10, 15 years. And that's a serious relationship. So when you take a check from somebody, like understand that that's a marriage, and you can say no. And sometimes it doesn't feel like you can because you're in the midst of fundraising, but the reality is that the headache and turmoil that comes from a bad check writer is not worth, the couple $100,000 that they may invest. Or sometimes if they raise, a couple $1 million with you, and you're like, oh, I'm getting this really big check. At the end of the day, it's not worth it if you are not aligned. And so I think that was a big lesson that I learned, significantly through my career. If you're going to manage funds, you have to be an experienced investor. You don't just wake up one day and think, oh, I'm going to manage millions of dollars of people's money without actually managing even a dollar of your own. And so I think it's really important for people to discover who they are as investors first before they go out with a strategy to somebody who might trust you with money. To invest on their behalf, because that's what you are as a fund manager. You're somebody that is trusted in the space to place and manage millions of dollars, was very important to people. And depending on what kind of capital you're taking from people, if you're working with individual investors or institutional, uh, really honing in on your strategy and having a belief and a support in your strategy as an individual investor is really powerful when you move it into a fund. As an openly queer woman, I've had challenges deciding when and where I was open about that identity. Early on in my career, it was never brought up. I'm in very male-dominated spaces, so just deciding how safe a room was, a constant back of mind thing. But I think probably about 5 or 10 years ago, or about probably 5 years ago, I got more comfortable being in those spaces authentically. It's definitely helped in general with society's openness to it, where it's made it safer and more comfortable to be open about my sexuality and, my family and bringing them into it and being open about like who I'm married to. Because this is a very relationship based industry, you start to have those kind of deeper conversations with your clients. You get to know everything about their families and their goals and wants and needs when it comes to their money. So you understand like what their kids want, what they want in retirement, what each stage of life that they're in. And so you get to connect with them now for me more openly. They get to know these things about myself too. And I think that that's a really cool thing to experience because it wasn't that way when I first started my career.